What is happening, people? Today we're talking about the blockchain and we're going to talk a bit about Bitcoin as well. So I'm going to basically how these interlink with each other. So basically all it is how does blockchain technology work? Now, it does sound complicated, but it's actually not when you do boil it down. So I'm going to try my best to explain it now. So blockchain is a revolutionary new computer science breakthrough that's happened recently. Like in the last 10 years is when it started working. And what this allows it to do is it allows people all over the world from every country, if you've got a computer, it allows everyone to keep track of how much money is actually in the Bitcoin network. So how much money is in there. Like there can be there's no censorship, there's no fudged numbers. Like what you see is what you get. That's like the beauty of it. That's why there's so much value in a system like this. Like it's a trusted system and it can't be changed. Like there can be no editing of the information in this like money system. So I can't just like hack it and then put £200 in my bank account. Do you know what I mean? So it's hack proof, it's safe, censorship resistance. And that's why it's taking off. That's why it's getting really valuable. So let's dive a bit deeper. So Bitcoin it's not the only blockchain, but it is the very first of its kind that actually works and is running. And this came out in 2009. There was a paper that got published in 2008 explaining the idea, but then in 2009 it actually got launched and it was working. So it's pretty cool. It's the Bitcoin blockchain is the largest, it's the most trusted, it's the longest running one. It's the OG, it's the first of its kind. So that's why it's the most valuable. It was the first one, and it's basically a digital store of value. So instead of having like a big gold bar and keeping it in behind your fridge or something, it's digital money that's stored online. So you don't need anything. You can just store it on the internet, basically, on the computers, I should say. So it's withheld every malicious attack against it since its creation. And the network actually gets stronger the more people that use it. So back in the day, like 10 years ago, it would have been more vulnerable than it is now. And it survived 10 years up till this point without getting hacked, without it breaking, basically. So if it survived its baby stages, like it gets stronger the longer it goes and the more people that are in the system. So chances are like we're onto something here. Do you know what I mean? So let's say you want to keep track of all the money on Earth. So you've got a spreadsheet, like an Excel document. You type in my name. Well, you don't type in my name. You just you've got a balance there. So your balance there, my balance there, someone else's balance there. And it does that for everyone in the world. Whenever someone spends money, that spreadsheet, that database gets updated. So the problem with that is whoever is maintaining that spreadsheet, whoever updates it, whoever has access to that spreadsheet can alter it, so they can change their balance to like 500 and your balance to 0. But this is why blockchain is so revolutionary, why it's so good, because nobody can go in and edit it. So rather than one person, a central middle party like a bank or something like that, rather than having one person or one middle party run it, every single person gets a little password which is called a private key, and this private key lets you access your wallet, your address which has got your money on it. So by giving everyone a private key, what happens is the whole system is protected, so nobody can go in and edit it. So there's a lot of computery and wizard stuff going on in the background. If you do want to know more about that, I did a full article on it and like an hour-long video and like an hour-and-a-half stream on it. So check my channel, check my website, you'll find it there. I basically dive into the nitty-gritty details like proof of work, hashing, the cryptography behind it, the transactions, the privacy, the storage, how it all works basically. But I'm not going to touch on that now. This video is getting long enough already. So since only you can access your money, you get to cut out the middleman like banks. Your money can never be taken from you. So like what's happened in different countries where the government has confiscated the money out of bank accounts so they can get out of a pickle that they've got themselves in. Your account can never be frozen, so bank accounts get frozen all the time if for any reason. So when you're involved in Bitcoin and blockchain, you are your own bank. So nobody can take your money from you. Nobody can freeze your money. Like, you're in charge of it, but that means you're responsible for it. So you can't rely on a bank to protect it. Like, a bank does protect you from fraud, so banks aren't completely useless. Like, they will protect you, and like, if you don't want to faff about, like, they're an easy, convenient thing to use. But like I say, you're not fully in control of that. Whereas with blockchain technology, you get to be in charge of your money. You're responsible for it, but you are taking on responsibility. You've got to look after it. If you lose that private key, again, there's another video going over private keys, public keys, and addresses if you're not sure what they are. Like, if you lose that private key, you can't you can't get another one, you can't reset your password, you can't reset your private key. Like, that's gone and your money's gone. So if you lose that private key, you lose all your money, basically. Not ideal, but how the system works, it's secure. There are ways to keep your private key safe. You can make multiple of them and like put copies in different areas. Like, there are safety tips you can use. And again, check out my video, check out my website. There's a load of safety tips on there. So thanks to all the complicated stuff that goes on in the background. That's like the friendly, bite-sized version. So a blockchain is a growing list of data called blocks that cannot be changed thanks to cryptography. Currently, the blockchain of the Bitcoin network is 175 gig, just a little bit more than that, but it's around the 175 gig area, and every 10 minutes it goes up by a megabyte. So it's just going to keep going. So if you're watching this video a year from now, like, it's going to be a bit bigger, you know what I mean? It's always growing, it's increasing every new block. So as data comes in, let's say transactions. So bear in mind, you've got other blockchains that are doing things that don't involve transactions, but for now, we're just focused on Bitcoin and transactions. So when data's coming in, this block gets filled out. So imagine you've just got a piece of paper and it's getting filled out with transactions. When it's filled out, that block is full. And then when the proof of work gets solved, don't worry about that. When they move on to the next block, all of those transactions get locked in place by this block above it. And you can never go back and edit this. So this is locked in forever. If you made a transaction here, that's never going to change. It's never going to be, it's impossible to go back and change that. So if that's the case where it's locked in place forever, you've got a system that people can trust, that they can rely on. So if I send you £200, you know I've got £200 basically, and because the system keeps track of it. So as these blocks are going on top of each other, they're locking each other. So like, you started off with block 0, the Genesis block, then you went block 1, then block 2, then block 3, and the further you go down, so if I'm on block 3 and I wanted to go to block 0, no, forget about that. Like, forget the last 10 seconds I just said about the block 0 and block 1. Forget all that. Doesn't matter. I'm not diving down that. So a system where data cannot be changed is a trusted system. Like, what you see is what you get. So let's dive in a bit more on how the whole thing actually runs. Like, you get what's happening, but how is it happening? So thousands of computers all around the world are connected on a network. So they're all just speaking to each other. They're all literally just connected. Computers are also known as miners and nodes. So if you heard like miners, like Bitcoin miners and nodes, that's just a computer. So thousands of nodes, thousands of miners, thousands of computers are connected on a network. That's all that means. So every time new data is created, so when me and you make a transaction, that is broadcast to every single computer on the network. And this gets filled out in the blocks. So we broadcast our transaction out there, and then it gets filled up in a block on every single computer that's running on the network at the moment. When one of these computers that are on the network solve what's called a proof of work it's called proof of work, and it's basically just a computational puzzle. You don't have to know too much about it, but basically when they solve this problem, you move on to the next block. So remember when I said before where these blocks are filling out, they don't have to fill out to the end. Like a block can be half done and then they move on to the next one. So it doesn't have to fill all the way to the end, but it can never fill all the way to the end and then just like quickly make another one. You have to wait for this puzzle to be solved, this proof of work. So all the proof of work does, it stops people spamming the system. Like if we didn't have proof of work, I could just spam the system, clog it all up and ruin it for everybody. So that's what proof of work's for. So when these transactions go to all these computers on the network, each computer verifies that the data matches their own. So if my computer solves the proof of work, all the other computers on the network will check my data to make sure it matches theirs exactly. If it doesn't match theirs exactly, they're going to carry on doing their own thing, and I'll be like on my own little chain here, meaning nothing. So you have to be honest to stay on the main chain of data. If you change a single letter or a number in any of the blocks anywhere, it just fucks it all up, and you're just left there on your own little chain with just you on it. There's no one else over it. You've just got you over it. But everyone, all the computers on the network are pooled, are solving this computational puzzle, and they're on this chain. They're on the main chain. So that's what's happening. So when the data is accepted as truth, all of the computers then begin working on the computational puzzle of the next block. So say like my computer solves it, everyone verifies it, that the data's right and I've solved it. So then what happens is everyone then starts working on the next block. So they're trying to find the computational puzzle of the next block. During this process where they're finding it, transactions are coming in and the block's filling out. And it takes roughly every 10 minutes for this computational puzzle to be solved and to move on to the next block. So with an average time of 10 minutes per block. And that's kept there through difficulty, which I'm not going to go into that, but there's a reason it's 10 minutes, and we can make it harder or easier so it can always stay in that 10 minutes range. Because if technology advances, it's going to be quicker. People are going to solve this problem a lot quicker. So thanks to difficulty, we can, as technology gets better, we can make it harder so it stays at 10 minutes. So let's go, and on the final bit now, like it says, like, how does, it says hose, like I've spelt this wrong and I've published it, so I'm going to have to edit that. I'll do it in a minute. So how does blockchain prevent fraud / double spending? And I'm going to touch on incentive as well. So basically, the whole reason we haven't had a digital currency in the past is because of the double spending problem. And what this means is, say like I've got £200 online, it's like it's just a digital file. I could change that file and duplicate it, or I could edit it, and I could send that £200 to multiple people. It's called the double spending problem. Like that's what blockchain and Bitcoin solve, the double spending problem. So in order to get around that through cryptography and hashes and proof of work and all that stuff, that's how we're getting around this. So you would actually need more computational power than all of the other computers on the network combined to commit fraud thanks to the proof of work, i.e. solving this puzzle. Since thousands of people are trying to solve this puzzle, if you want to beat that, you would have to have more computational power than all of these thousands of computers combined to beat them. Because the first one, because of the largest combined pool of computational resources, everybody sticks to the chain that's the longest. So if I decide to work maliciously on another chain over here, what's going to happen is I'm not going to have enough computing power, so this blockchain is going to solve more blocks and I'm just going to get left behind. So because I'm left behind down here, nothing's happening. Like I can't do anything. But everyone has to stay on this main chain. So that's why the pooling of these resources is so is how it all works. Like that wasn't the best explanation. I'll dive in a bit more. We'll get a good sentence out of me in a sec. So even if you do, so let's assume I've got more computational power than thousands of other computers. Let's assume that does happen, like that if that scenario happened, which it just won't. I can't go into your account and just like reset you to 0 and put like 5 billion Bitcoin in mine. The system doesn't work that way. The only thing you're able to do if you are committing fraud and you've got more computational power than everyone else is you can change transactions that you're involved in. So if I send £200 to a website and then I download all of the I don't know, video content that they're selling, I could download it all quickly, go back and then change my transaction side and then get me money back. That's all I can do. I can just double spend my money. But by doing so, I would basically break the entire Bitcoin system. Nobody would trust it anymore. Like, if your money's not safe, the system isn't trusted, so it just loses value. It becomes worthless. So if you do that, you're going to break the system. So all the Bitcoin you've got in the system is basically useless now. And now you've got a load of computational power that you've got to run, which is just like sapping loads of money out of you. So what actually happens is, so why would people help the network? Why would people give up their computer processing power to run the network? So why do people do it? It's called incentive. So when we were talking about the blocks before and solving this proof of work, this computational puzzle, what actually happens is you solve this computational puzzle, and then in the next block, you get to put in a transaction, and that transaction rewards you with Bitcoin. So at the minute, it's like 12.5 Bitcoin. So that's a staggering amount of money. So if you manage to solve that proof of work, if your computer manages to solve it, you get rewarded by starting the next block. So if you solve the puzzle, you start the next block and then you get rewarded. So you get Bitcoin given to you, basically. So that's what's happening. If you have... let me have a touch on this as well. So, like I was saying with... if you've got more computational power than everyone else combined, you could double spend something a few times, get away with it, get caught, and then the whole system's useless. Your Bitcoin's useless. Your computers are now useless. Well, not useless, but if you actually play along with the system, if you put all that computational power into helping the Bitcoin network, what happens is because you've got more computational power than everyone else combined, you solve the proof of work more often than everyone else, so you make more and more money than everyone else. And since it's only 21 million Bitcoins ever, like no more than them can be made, when eventually when you're getting rewarded for solving this proof of work, so you do get rewarded Bitcoin. At the minute, it's like, I don't know, there's still a couple of million left to be mined. So until those are mined, you're going to be making so much money because you're making more money than everyone else, and you're putting all that computational power into the Bitcoin system, making it stronger. So there's no financial incentive to commit fraud on the Bitcoin system. It's only like, the only incentive is like maliciousness or competitors or anything like that. So there's no way to make money. Like, you'd make more money by playing along with the system than attacking the system. So that's the incentive. That's how it runs, combined with everything else. I wanted this video to be quick, but it's ended up just going on forever. So the longest chain of blocks serves as proof of all the previous transactions and is the most trusted because it came from the largest combined pool of computational power. So because so many people are working on it, the chance of them solving the problem is higher. So that's going to be the longest chain. So that therefore is the most trusted chain. So as long as you work on the most trusted chain, you're happy days. If you verge from that path, everyone carries on without you and you're just left here on your little loser chain. So it's just not going to work. So you can't steal from people, you can't hack it, you can't fuck it up. It's censorship resistant. It's just sick, mate. Like, it's really good. So let me end on my last words. There's a bit of a summary I've put down here. Bitcoin and blockchain technology allows people all over the world to transact with each other without relying on middle parties like banks. A peer-to-peer electronic cash system that runs on trust. The network hasn't even been live for 10 years at this point, yet we're still in the baby stages of growth. Look at how much the internet developed in 20 years. We're on that path, if not a more, I don't know, a better path than... a more world-changing path than that. Like, how much did the internet change the world? Cryptocurrency is like, and blockchain technology is like just whoosh. It's the next layer of just crazy technology, basically. So with this life-changing and world technology, who knows what the future holds for us? That's my video. Leave any questions down below. What do you think is going to happen with the world and cryptocurrency and blockchain? Any predictions? Check out my socials all along here. Whoa, wrong side. Whoa, where are we going? There you go. Check out my socials. Like my stuff. Share with friends. It actually matters. Like, a like on my video means the world, and it gives me motivation to do more, and it's just nice, innit? Like, you just want to wake up to a like. Thanks for watching. Check out my other articles. Love you all. 2 more videos coming after this, so I'm probably going to change my top. Like, the next 3 videos that come out, including this one, maybe 4, like, they're all going to be filmed on the same day, so I've got to hurry up with this fucking light, mate. And I'm probably going to change my shirt so it looks like I've done different videos. So that's just for you to know. Thank you. Peace. Mwah.